We are with Evan Siddall, CEO of the Canada Mortgage and Housing Corporation. And Evan, it's great to have you with me. And I feel as though this is actually a particularly important time to have this conversation because there is so much uncertainty. So you get the fun job of trying to talk through all of those unknowns. But one of the biggest questions, and it's true everywhere you are, is what will happen to house prices. It's been a real uncertainty in Canada, and I know you've got a view, and it differs with some others, and it differs with what the market's saying right now. So what's your current view of what will happen to this market?
Our view, Amanda, hasn't changed. It's that the combination of economic adjustment that has to happen, the number of people on income support, the number of mortgages under deferral mean that at some point, probably early next year, through the middle part of next year, there will likely be a negative adjustment in house prices.
And quantify what that might look like. I mean, a negative adjustment, we were at pretty lofty levels in some parts of this country. So how much of an adjustment should we expect?
Yeah, that's hard to tell. And it's path dependent because in part it depends on how the virus itself manifests again. What industries are affected? Of course, oil producing regions are affected by geopolitics in that area. And some markets got farther ahead than others. So in general, though, we think high single digit negative adjustment is probably what we can expect in most markets. And, we said in the early part of this pandemic, 9 to 18%. And 9 was, we think everything's going to be reasonable. We're still in that territory, whether it's 8, 9, 7, doesn't really matter, that order of magnitude. 18 was very much a this could be really bad kind of scenario, which doesn't seem to be panning out right now.
And just let's stick with that thought process for a second. What would take us to 18 in your scenario building? What's the worst case scenario predicated on?
Well, that was back in March. So I don't think this is very much a path dependent forecast. That was the pandemic was going to be horrible, deep, and it's been pretty bad. But it hasn't, government income support and government fiscal support, government monetary policy support have helped alleviate some of those pressures.
Which actually is an interesting problem that we all have right now with forecasts, which is there's an awful lot of government support, and there is this sense that it's delaying some inevitable consequences, jobs that are already lost, but we haven't seen them, the layoffs happen yet, and the like. Yeah. Bankruptcies that have yet to really be noted. How do you think that plays out? Again, I know there's an awful lot of uncertainty in how that might look, but as government stimulus is withdrawn, what does that do?
Well, ultimately what it does is it requires economic adjustment. And in some businesses, there will be unemployment that results. And unemployment is the kind of thing that drives house prices lower. Governments, though, we're involved in policymaking in a number of different programs, including the commercial rent support program. And governments are deliberately, I think, in Canada, overreaching and creating more of a cushion than they otherwise would, because that's what government should do. And that means that we will defer an economic adjustment, but it also means we're going to save businesses that have a shot at surviving. And I think that's the right calculus.
You and I have been talking about Canada's housing indebtedness as a problem long before the COVID-19 pandemic came along and created a whole different kind of situation. What's the lens on where that stands? And it's been an interesting picture because for some people, the savings rate has actually gone up, as we know, through all of this. What's your level of concern about household debt right now?
It's only higher. It's only higher because some of these deferred mortgages will not be repaid, and levels of household debt have gone up because people have deferred their mortgages. The debt to income level is artificially low because of income support measures that the government's provide, in particular CERB and broaden DI. And that's good policy, but it makes the savings rate look like it's going up when it's really just the CERB and people spending differently right now because we're in a lockdown economy or going back into one, perhaps.
And so in that context, what's your sense of the right kind of policy adjustment as we move forward here that would keep any kind of shock from happening?
Well, people hate me for this, people dislike me for this, but the stress test is having its desired effect. Bank of Canada is issuing monetary stimulus so that people who have decent levels of household income, not too high, might borrow a little more and buy a car, might borrow a little more and buy a fridge. Highly indebted people above 4 times income should be much more restrained because they may end up having negative equity in their homes. And the stress test actually helps restrain that lending to over leveraged people. And that goes hand in hand with good monetary policy.
So would you say that because a number of changes were implemented, again, before COVID, but maybe fortuitously, setting us up for maybe a slightly more stable environment, you implemented a number of policy changes designed to, I don't know if you like the terminology, cool the market, but certainly kind of cool heads anyway. Make people realize that low rates don't always last forever, and that the banks actually need to kind of be a little bit more mindful and putting words in your mouth here, but about the indebtedness situation overall. How much did that have a mitigating effect on what might come now? How much did that set us up better for where we are today?
Yeah, that it's important. What we were doing there is we were signaling to people that we have a responsibility as a government entity not to jeopardize the economy. And high levels of debt create future drag on an economy. We were not telling banks they couldn't do this lending. That's for the Department of Finance. And we knew that our commercial competitors might take up the slack. That's okay too. They've taken up the slack. We were just saying we can't countenance that kind of behavior, that kind of we shouldn't be using taxpayer money to support high levels of indebtedness, and you're on your own. And that's all we were saying. And we knew the business would go away from us. We were asking them please not to penalize us further because we were doing something we thought was in the best interest of the Canadian economy. So it really, Amanda, wasn't meant to cool off the market. It was more us being conscious of our role as a Crown corporation.
We did see the business move away from you, some of it. Presumably there is some mortgage origination that never happens as a result of these changes, but we saw that private part of the market grow. Are you at all concerned with the share that it holds today versus 3 or 4 years ago?
That the private have?
Yeah.
Private share? No. In fact, I thought CMHC was too much of a market leader. And we deliberately said we wanted to de-risk CMHC and have private insurers take up the share. And that's exactly what's happened. And I think that makes for a competitive environment for lenders and for mortgagees.
I guess I would put it another way. I understand that you did not want to be the dominant player, and especially because, of course, that puts theoretically, that puts taxpayers as the last backstop. The private players, of course, may have different lending standards. They may be all over the map, and they may be riskier actors than the regulators would like. Is there any concern on that front, I guess, that the risk of the portfolio is growing?
No. We're all regulated by OSFI. They have they use different lending standards than we do, but the loss rate in this area is actually quite low. It's profitable business. It's just business that, and I think I said in the letter, we acknowledge it's profitable for them, even after capital. But we need to make sure that we're not jeopardizing the future of the Canadian economy. And we were concerned that's what we were doing. So no, we have the best financial system in the world, Amanda. The mortgage insurance system stands behind banks to make sure the riskiest part of the housing market is actually held by the government, because even the private insurers are government guaranteed.
We say this, that we have the most stable financial system in the world. We have this level of household debt that certainly puts us in league with levels that should make us uncomfortable. We could now, it's a slightly different story, but we could now say, our personal share of government debt is also at incredibly high historic levels. Should we not be concerned about stability when we think about that household indebtedness?
Oh, I don't think it's a stability question, sincerely, because household indebtedness is generally that debt sits on the government's balance sheet one way or the other. It's economic growth we're concerned about. It's the drag of people having taken future consumption and spent it today and tomorrow on interest charges. And that will slow us down in the future. And that's the thing we should worry about. Yeah, I sincerely don't think we have a financial stability problem in Canada.
Do you think we have a growth problem, or potentially could have a growth problem?
I really, really do. The Bank for International Settlements, the IMF, Bank of Canada's done a lot of work on this. And the suggestion is that at levels that are way below current debt levels in Canada, economic growth starts to drag. We are like 50% above that threshold now in Canada, a long way above it. And so we will have debt slowing down our economic growth. Certainly that's the case.
And yet we need our economic growth to help us manage our debt. What's the balance that you would advocate for, just in terms of, I know this takes you a little bit outside of your current purview, but in terms of a government that needs to offer up restraint, or a vision of restraint, but also a vision of economic growth above our historical average, right, to get us out of this, the deficit?
So successive finance ministers of all colors that have been in government in Ottawa have progressively rolled back the insurance standards as a way to, it could have been worse, I suppose, is the good news. And we need to get onto the back of this pandemic. Economic growth right now is coming from government spending and fiscal stimulus. That's proper. But what we really need is to get the pandemic behind us and have confidence restored in the economy so that people get investing again, and we get some unemployment that's going to have to work its way through behind us.
We have seen remarkable recent resilience across housing in this country in terms of home sales. There's maybe a whole variety of reasons for that. What do you think drives it? And I ask you that in the context of, what are you looking for that would see that stop? In other words, the support for that stop beyond the government support we talked about. Are there other factors at play here that are keeping the market more buoyant than it deserves to be?
Certainly, one is just supply. It is hard to supply houses, and any response in demand goes straight into prices. So, we announced yesterday, the government of Canada announced a $1.2 billion rapid housing program, which is targeted at people who are unemployed. That's supply. Our rental construction financing program has been massively successful. We've got to do, that sort of thing and increase supply. The other, we're seeing a behavioral phenomenon, of course, where people are, in general, selling condos and moving out to the suburbs. Young people are figuring out that they don't need to live downtown anymore to go to work because they're not going to their offices. If that's something that persists, there will be a demand for housing in the periphery of cities and a supply of condos, and some of that's showing up. At some point, the difference between the price of condos and single-family homes makes less sense, and people go back to condos. The market makes this adjustment. But there is something going on with how people choose to consume housing, as it were. And that we don't know how long that's going to last, or if it's going to last. It's really it's path dependent. It depends on how long this pandemic lasts.
And I guess whether, even should the pandemic end, do some of these behaviors stay with us? From kind of a housing market point of view, how long do you think is it for those kinds of trends to show up? When do we know if people will work remotely, even if they don't have to?
Yeah, people, I think the general trend in commercial space has been some of that anyway. This has accelerated it a bit. The longer the pandemic lasts, the more people adjust to this kind of behavior, and therefore the less likely they are to go back. You get through a couple of years of this kind of thing, and my guess is it becomes pretty rote, pretty trained, that this is how we're going to work. I don't quite, this is an opinion, I don't think that's the case. I don't think the introverts have won the war on hugs and isolation. I think some of us will want to go back to offices, but some will stay away. Yeah.
I'm trying to remember when you raised the real kind of call on supply, but I feel like it was a speech you gave in Vancouver in maybe 2017,
yeah, that's probably right.
Early 18. And your message was, stop talking about you're worried about hot housing markets and start building, supply. Densification is a big theme, right? That would get us there. Where are we on this? Yeah. On the supply side? I mean, because one of the affordable housing, rental units that families could actually afford to live in. It's not the sexiest part of the housing conversation, but it is, of course, one of the most important parts.
Well, this rapid housing initiative that was announced yesterday is a response to mayors, to provincial premiers all saying, we need your help, federal government, and we're a little strapped. And we understand now the value of a house even more, right? It's a shelter, of course, but it's also protection from a pandemic. And we know that people who are homeless or who live in tight accommodations, in particular, people in long-term care, have been particularly affected by this. And so the value of housing in and of itself is something we're more aware of. And I think that will stimulate more supply. I think governments see that. I think the private sector sees it. And I'm hopeful there's more of that coming. I do think maybe it's not sexy, but I do think the conversation shifted.
I mean, obviously the dollars earmarked is incredibly important, not to downplay that. But there's a long way from money flowing to actually seeing projects get built, and a lot of kind of jurisdictional fights and people that stand in the way. Let's face it. But are you confident that there's been a change in thinking around actually getting, affordable rental, for instance, actually built?
Oh, I mean, look at Vancouver since 2016. There's been a massive shift in the pace of approvals in Vancouver, quite clearly since 2016. Now they're still catching up to a lag before that. In Toronto, the mayor, the deputy mayor are talking about housing quite consistently. Mayor Wilson in Ottawa, Don Iveson in Edmonton. Maybe it's just what I'm paying attention to be fair. But municipalities really do understand their responsibility. It's not all on them. And it's too easy to point our fingers at mayors and city councils and say, you're too slow. There's land banking going on by developers. All sorts of different manifestations that slow down the supply of housing.
There are a couple of really interesting factors on the demand side that the pandemic has changed, and hopefully temporarily. But one of them for Canada has been immigration. I guess globally, that's true. Every country will see lower immigration this year. It's been a huge driving factor for Canada in recent years. Certainly in as we know, in 2018 and 2019, massive economic growth, huge source of demand for new housing. So where do we fall now that we know that this year is not going to be good and we don't actually know when it'll pick up again?
It's one of the factors behind our weakening house price forecast, because that demand, and it's not just demand from immigrants, it's demand from foreign students too, a significant source of income for our universities. Now, some of them will do that virtually, but they're not coming here to rent homes. And that demand has come out of the market, and I don't think the market's quite caught up to it. There's been a bit of a behavioral factor, we think, in the market, which there's a technical term for it. It's called FOMO. People are just chasing. It's like momentum investing, right? They're chasing something, and that energy doesn't sustain itself in the longer run.
And I guess the other COVID-related aspect of this, and it maybe actually even have some other macro elements, but the foreign investment aspect of our market has been an important one, especially for some key places, right? Those hot markets. But Toronto and Vancouver, I think we can say especially, has benefited, or not, depending on your point of view,
or not,
but from massive foreign investment. And I know there's been some policy adjustments there to try to make sure that our market's not distorted by that investment. But for those who are benefiting from, the appreciation in value, are we likely to see a return to that, the more free-flowing capital of a couple of years ago?
We have an open economy. We're an economy that's built on people who come from other places. We're a country that's built on people who come from other places. I think that does come back, especially if our dollar weakens. It'll be even more attractive. That's just who Canada is, and we're a wonderfully attractive place for people of different colors and ethnicity and preferences. And that's something I think to be celebrated about our country. It does result in increased demand for housing and higher house prices. And unfortunately, sometimes the dialogue is an us-them dialogue, which I think is quite unhelpful. We've always had foreign investment in Canada. We've always had foreign investment in housing.
And that's something that we should continue to I mean, I guess that just to put some context around it, I think it's probably a relatively small but fairly influential part of the market, if I could put it that way, where it's sort of the investment for investment purposes. So the empty houses that you see reports on in British Columbia, for instance, that's not a concern at all?
Sure, it's a concern, but my mother is one person who lives in a 3-bedroom house too. That's a version of an empty house. So, we have housing capacity. It's just not where the people want to be, or they're not available for rent.
Right.
We're actually looking at CMHC's working on an app where we're going to try and match people who are overhoused with people who need housing. And, that's just one thing we can do, thinking innovatively and differently about housing.
All right. We look forward to seeing it. We appreciate your time today, Evan. Appreciate it.
My pleasure. Thanks, Amanda.